On Friday, American stock indices closed in the red after a brief morning rally proved short-lived. Investors were analyzing fresh inflation data and considering the political uncertainty following the U.S. presidential debates. Nike shares suffered their biggest one-day drop in 20 years due to an unfavorable forecast. I don't think inflation will change significantly because the Federal Reserve is firmly committed to its 2 target and maintains strict discipline, said Amaletti, head of active equity at Allspring. Data showed that monthly inflation in the U.S. remained unchanged in May. This was an encouraging sign after a sharp rise in prices earlier in the year, which had raised doubts about the effectiveness of the Fed's policy. The Commerce Department report also indicated a slight increase in consumer spending last month. This added optimism that the Fed could achieve a soft landing for the economy. The probability of a rate cut in September rose to 66 following the release of the Personal Consumption Expenditures Price Index, according to LSEG FedWatch data. Despite the Fed's forecasts of only 1 rate cut this year, traders continue to bet on 2 cuts, hoping for further reduction in inflation. The first debate on Thursday between U.S. President Joe Biden and his Republican opponent, Donald Trump, also impacted the stock market, noted Thomas Martin, senior portfolio manager at Globalt Investments, highlighting the unconvincing performance of the incumbent president. People are trying to understand what will happen with the presidential election. After the debate, uncertainty has only increased, he said. Treasury yields recovered their morning losses and ended the day higher, putting additional pressure on large-cap stocks. San Francisco Fed President Mary Daly noted the slowing inflation and called it good news, confirming the effectiveness of policy. Fed Governor Michelle Bowman stated that the central bank would stick to its course as the inflation target has not yet been achieved. Economic indicators have so far failed to eliminate doubts about the depth of the Fed's rate cuts this year, keeping Treasury yields within a set range. However, next week's U.S. employment data, along with new inflation data and a speech by Jerome Powell, could change this forecast. According to a report published on Friday, monthly inflation in the U.S., measured by the C-Price Index, remained unchanged in May. This confirms the trend of slowing inflation and sustained economic growth, which has stabilized bond market fluctuations and supported stocks in recent weeks. Nevertheless, federal funds rate futures indicated that traders expect a rate cut of just under 50 basis points over the course of the year. The market's reaction to the upcoming employment data, to be released next Friday, could be amplified by low liquidity during the week when many U.S. bond traders will be on vacation due to the Independence Day holiday on July 4, noted Hugh Nicola, head of fixed income at Gintrust. The market is anticipating new major events, he added. Other significant events this month include the release of consumer price data, scheduled for July 11. Jerome Powell is also expected to deliver his semi-annual monetary policy testimony before the Senate Banking Committee on July 9, as reported by the office of its chairman, Senator Sherrod Brown. If tradition holds, Powell will give similar testimony the following day before the House Financial Services Committee.